Is it inflation or just your imagination? Is the economic data even making sense or even useful at this point? Ultimately, what the Fed chairman sees in the economic tea leaves, or the morning oatmeal for that matter, is not within your control. However, protection of your retirement savings is in your control. This should be motivated by knowledge and confidence, not fear. If you think you may be falling behind in your financial goals, see the video description to access the free Inflation Retirement Calculator to make sure that you are on track. Also, please share your experience in the comments. To discuss why gold works, why fiat currencies ultimately fail, and why gold and other scarce assets act as an insurance policy against risk, we will hear from macro analyst and investor Lyn ALden, economist and investor Keith Weiner, economist, White House advisor, and author Jim Rickards, and CEO of Shapeshift, Eric Voorhees.
The Orwellian nanny state is alive and well, and fiat currency is one of its most insidious tentacles. Fiat has these poor monetary attributes because it is a tool and appendage of the state. It exists to serve the state, not to exist market participants. Its attributes as money are intentionally constrained and inferior so as to siphon wealth to the state through debasement and to surveil and control the behavior of the king's subjects. Remember that fiat means value by decree, not by merit. Fiat now persists solely on the momentum of tradition. The older generations may cling to it for quite some time, but they and their ways are dying, and their wealth decays in front of them, debased openly by the very people they worship, salute, and vote into office. Someday, school children will laugh and joke with each other as they learn about the silly flag paper with cultish incantations inscribed on it. In yet another of history's examples of mass delusion people thought to be valuable. Or maybe they won't laugh and joke because they will have learned how much destruction it actually caused. Maybe fiat will be looked at more like medieval bloodlettering, a dark symptom of human ignorance that is so obviously foolish in hindsight.
So many of the critics, they're eggheads. They got some academic training. They sit in front of their screens all day. They repeat the same, regurgitate the same canards and false statements about gold, and they think they know it all, but they never actually go out and, as I say, get your hands dirty and go down in the mine and talk to people around it. But when you do, and I've done all of that, when you do that, what you discover is just how scarce it is, how difficult it is to mine, how much shortages are growing, and then you look at the geopolitical side and see what Russia and China, but Iran, Turkey, and others are doing to acquire the gold. You say, man, this just doesn't add up. This stuff is really hard to find. Our enemies are buying it as fast as they can.
So there's some things about gold that are unique. Karl Menger, the Austrian school, defines it as the most marketable commodity. That marketability refers to if you trade in and out of that commodity, you incur a certain loss, and that loss is the measure of its bid-ask spread. You think about money as a lubricant, it's an indirect medium of exchange. You want it to be the thing that you don't lose a lot to get paid in money, and then you turn around and pay for the next thing that you want in money. You also want something whose marginal utility is not diminishing. Marginal utility refers to the value of the nth plus 1 unit, and how do you compare that to the value of the nth unit? And so every commodity has a diminishing marginal utility, that the next unit is worth less than the previous, and so on. Well, think about money for a minute. This is the thing that we use as the unit of account in measuring our businesses, and everybody measures their net worth. If you're using some diminishing unit to measure your net worth, you have the problem that you can't really tell if you're getting richer or if the quantity of this thing is increasing.
Different monetary systems inherently incentivize different types of behaviors. And if you're in an environment where the unit of account is constantly debasing, you're enticed to short that, short the currency, build anything that's slightly more scarce than the currency, which is not a high bar. The importance of the unit of account that we take as money. The majority of inflation narratives are based around the idea that your savings are being devalued. So as the supply increases, your liquid savings are devalued.
Just a quick interruption to say thank you for supporting our channel. Please like and subscribe if you enjoy this video content. It really does make a difference. Also, a quick mention and shout out to one of our sponsors, American Hartford Gold. American Hartford Gold is a leading gold investment company that helps individuals and families diversify and protect their wealth with precious metals. Whether you are starting a brand new gold IRA or rolling over an existing account, the company will make this process seamless and stress-free, with endorsements from respected and renowned voices across America and one of the lowest investment minimums in the gold IRA industry. American Hartford Gold makes it easy to get started investing in precious metals. To find out more about American Hartford Gold and how this trusted gold investment company can help safeguard your coveted retirement savings, see the link in the video description to visit American Hartford Gold's official site to receive a free gold investing guide. Also, check out our video review of American Hartford Gold by clicking the link in the top right. Now, back to the episode.
in many ways, a equal or bigger problem is that the contracts and the wages of people are constantly being devalued. And so, for example, if CPI averages 2.5 or 3% per year over the long run, the realistic basket of things you want to buy that are not like fully, degraded by technology and things like that. So, for example, housing, healthcare, nutritious, like dense food, things like that, is probably increasing at 4 or 5% per year. If you're not getting that wage increase plus whatever your realistic seniority, higher productivity bonus is, you're being diluted constantly.
The thing about gold is that it's been mined more or less continuously, as far as we know, for 5,000 years. All the gold mined in human history with very little loss is still in somebody's hands somewhere in the world today, which means is we just keep accumulating it. There's no such thing as a glut in gold. There's no such thing as a shortage. And what that means is the marginal utility of gold is not diminishing. After 5,000 years of accumulating it, utility or the marginal value of the next unit of gold hasn't yet fallen below the marginal cost of mining it. So there's some things about gold that are unique. That stability is a very important thing when you think about both as a means of payment and also as a means of a long-term unit in a long-term contract, whether it's a rental contract, lease agreement on real estate, whether it's an employment contract, whether it's debt you borrow. That stability is a very, very important thing. Over thousands of years, gold developed that. Nothing else, really comes close to it.
It responds to normal supply. It's not magic. It's not a shiny metal. It's not a mystical belief system. It's a very pragmatic, nuts and bolts, get your hands dirty business. So I don't recommend taking all your money out of the bank or selling all your stocks or cashing in everything and buying 100% gold. What I recommend is about 10% gold, 10% of your investable assets. Take about 10%, get gold. That's your insurance policies.
Gold holds a proven, time-tested track record as an economic constant that spans millennia. Why is it important to have an economic constant? What is the main question every person planning their retirement or building a business needs to ask themselves? Are we growing wealth or losing wealth? And how do we measure this? Gold is that tool. With a 5,000-year record that has withstood every economic business cycle, stock market booms and busts, global conflicts, and outlasting every faith-based fiat currency, gold is no one's liability. It builds wealth while preserving it. Owning physical gold and precious metals requires responsible sourcing of grades, purity, condition, the best prices, transparency, and most of all, security and storage. Gold IRAs are a tax-deferred means of owning physical gold and ensuring all these investing principles are met. We have reviewed and vetted the best gold IRA companies that meet all these requirements. See the link in the video description to access the free gold investment guides. If you have $100K of retirement savings to protect and want to take advantage of the best gold prices, see the link in the video description to sign up for the free Gold and Silver Web Conference hosted by Augusta Precious Metals. Thank you for watching.